In today's video, I'm going to teach you how to use TC2000 Market Breadth. Market Breadth helps you see how the overall market is behaving under the surface, not just what a few big stocks are doing. It's an essential context check before you place any trade. Start by opening a chart in TC2000. Any symbol is fine, because the breadth indicators you're about to add reflect the broader market, not the charted symbol itself. Think of the chart as your canvas and the breadth indicators as overlays that tell you how healthy the market environment is. Next, press the / key on your keyboard to bring up the Add Indicator search, or click the Add Indicator button if you prefer using the mouse. The search box is fast and forgiving, so you don't need to type full names, just the codes. Now type the market breadth indicator you want and select it when it appears. TC2000's standard breadth tickers start with T21, and each one highlights a different dimension of participation. If you choose T2100, you'll get the advanced decline line. This is a running total of advancing stocks minus declining stocks. A steady rise confirms that more stocks are participating in an uptrend. A flattening or falling line while price rises can warn of narrowing leadership and potential weakness ahead. Select T2107 to see the percentage of stocks above their 200-day moving average. This reflects long-term health. High readings suggest broad, sustained strength. Low readings indicate that most stocks are in longer-term downtrends. Many traders watch for shifts through the middle ranges to spot changes in market tone. Pick T2108 for the percentage of stocks above the 40-day moving average. This is a shorter-term lens. It reacts faster to swings and can highlight overbought or oversold conditions more quickly than T2107. Rapid surges or collapses often precede momentum turns in indexes. Choose T2110 to view the ratio of 52-week highs to 52-week lows. When new highs outpace new lows, risk appetite is generally healthy. If new lows dominate, it signals stress and caution. Finally, T2106 is the McClellan oscillator, a momentum tool derived from advances and declines. Moves above or below zero suggest shifts in breadth momentum. Extreme readings can highlight exhaustion, while crosses back through zero may confirm trend changes. Use these indicators as a dashboard. Add one, observe it alongside price, and let it frame your decisions. They won't give trade entries on their own, but they will help you align with market conditions and avoid fighting the tide.